Welcome to the 2022 ERTC Frequently Asked Questions and Answers video.
What is the Employee Retention Tax Credit and how is it different from the Payroll Protection Program?
The Coronavirus Aid, Relief, and Economic Security Act, also known as the CARES Act, was signed into law on March 27, 2020. It included two programs to assist businesses with keeping workers employed: the Payroll Protection Program (PPP), administered by the Small Business Administration, and Employee Retention Tax Credit (ERTC), administered by the Internal Revenue Service. PPP funds are distributed based on 2.5 months of payroll, and a minimum of 80% of the funds must be used on payroll to be eligible for forgiveness. Additionally, PPP funds are not taxable as revenue and you may still take deductions for the payroll covered by PPP. ERTC tax credits, however, are credits, or refunds, for a percentage of payroll in each quarter that you qualify. There are specific rules for determining eligibility by quarter, and limiting the dollars that can be claimed for each employee.
I got PPP funds already. Can I also apply for ERTC funds?
Yes. Initially, with the CARES Act, employers could choose to apply for PPP or claim ERTC credits, but not both. On March 11, 2021, the American Rescue Plan Act of 2021 was signed into law and included many modifications and expansions to existing elements of previous stimulus programs.
How do I apply for ERTC tax credits?
You simply claim the ERTC tax credit like you would any other, by asserting to the IRS that you can legally claim the credit. When you claim a child tax credit, you do so by asserting this fact on your Form 1020 personal income tax return. The difference is that when you claim an ERTC tax credit, you do so on your Form 941 employer quarterly tax filing. Another perk of ERTC is that since you can often estimate these credits in advance of distributing cash for payroll, you can file a Form 70-200 to receive a cash advance to avoid waiting until the end of the quarter to apply for the refund.
I thought the tax credit was for 2020.
You're right, it was originally a 2020 credit. And it was either the Paycheck Protection Program or ERTC. Almost every business chose the PPP option. The ERTC was not widely used until March 2021, when the American Rescue Act changed IRS regulations and millions of businesses were now eligible for both the PPP and ERTC program by amending their quarterly Forms 941.
My revenue in Q1 2021 is back to pre-pandemic levels, so I must be ineligible, right?
No. Even though you may feel like revenue is back to normal, there are some items you want to consider before passing on this ERTC assessment. First, even if revenues have returned to normal in 2021, you may have qualified in 2020 and you can retroactively claim those credits. That eligibility criteria in 2020 was based on revenue declines from 2019, or if your business was partially or fully closed due to governmental mandate. Second, while your revenue may have returned to normal in Q1 2021, remember that we are comparing your Q1 2021 to Q1 2019. If 2019 was a year of growth for your business, then your revenue levels 2 years ago may have been much less than Q1 2020. And lastly, if your revenues were down in Q4 2020 by just 20% compared to Q4 2019, then you may also be eligible for Q1 2021. There is a safe harbor provision that few advisors are talking about, and it means that many businesses are qualifying for $7,000 per employee in Q1 2021. I know, it seems too good to be true, but the government wants to incentivize and reward you for keeping U.S. residents employed and money flowing through our economy as we rebuild bigger and stronger than before.
I thought payroll taxes deferred in 2020 had to be repaid. Does ERTC work the same way?
You are most likely referring to a provision of the CARES Act that allowed employers to defer the deposit and payment of the employer's share of Social Security taxes. Those deferrals must then be repaid, with at least 50% of the balance due by December 31, 21 and the remaining balance due by December 31, 22. ERTC credits are not a deferral. They are dollar-for-dollar credits against wages you've paid. Not taxes you've paid, but actual wages. These credits can offset future tax contributions or you can receive a refund check. It's totally your choice. And you will not have to repay these funds, unless, of course, you don't provide adequate documentation in the course of an audit.
Why isn't my bank, or my CPA talking about this?
Your banker, CPA, or financial advisor was probably very helpful when it came to getting your PPP funds because they were effectively signing you to an SBA guaranteed loan. The SBA paid the bank administrative fees based on the PPP loans they made, and so they were incentivized to educate you about the program and get all your paperwork in order. Compared to the ERTC, the PPP program was also a rather simple calculation. 2.5 times your average monthly payroll including health insurance and state unemployment taxes. From the conversations we've had with bankers, they have no interest in involving themselves in your employment tax compliance. For them it is a liability and beyond their scope of services.
What about my payroll service provider? Shouldn't they be on top of this?
Computing your ERTC credits requires visibility into your P&L and PPP forgiveness applications. Not only that, but the complex requirements around eligibility and allocating ERTC credits at the employee level while accounting for annual and quarterly qualifying wage gaps and, well, you can probably tell why payroll services are not offering to do all of this for you. In fact, most wise payroll services are asking clients to sign an indemnification waiver before submitting a Form 941X because the payroll service can take no responsibility for the accuracy of the ERTC credits you are claiming.
Can I find out more information on the IRS website?
Read Notice 2021-20 on the official IRS FAQ site. The link will be in the description.
Will my tax CPA handle this for me, since they handle my income tax returns?
Whether your tax accountant is a CPA or EA, he or she most likely only prepares your federal and state income tax returns. However, ERTC credits are claimed against employment taxes on Form 941, and cash advanced through Form 7200. The complexity of the ERTC program is a beast unto itself, and every tax accountant we've talked to has said they focus on staying up to date on the ever-evolving income tax code, and they can't now become experts in the ERTC program as well.
My bookkeeper has all my info. Can they handle my ERTC claims?
Your bookkeeper should certainly have access to all the information that is needed for an accurate calculation of your legal ERTC claim. They will have your financial reports, payroll registers, and PPP loan forgiveness documents. The million-dollar question is, do they have the time? So far, we have not found a bookkeeper who is able to take all this on, while handling the day-to-day of bookkeeping. If yours can't, then take them up on their offer. We're happy to take a second look.
I know additional business owners that might qualify. Can they apply here too?
Absolutely. Our professional team is equipped and ready to help as many businesses as possible to apply for their ERC funds. We welcome you to share this site. Sharing is caring. These are just some of the businesses we've helped in the past 30 days. Business consulting firm in Newport Beach, California, 19 W-2 employees, $44,960 credit. Also a presentation design agency in Nashville, Tennessee, 19 W-2 employees, $162,979 credit. Check your eligibility on erctfund.com for free. Claim up to $26,000 per employee. Answer 10 questions in less than 15 minutes. No cost, no obligation. Find out for free if you qualify. Go to www.erctfund.com now.